Let us pray. Eternal God, how great you are. You are clothed with majesty and glory, riding on the wings of the wind. From the rising of the sun to its setting, we lift our hearts in gratitude, for you have done marvelously. Lord, continue to sustain our senators with your constant love and faithfulness, answering them when they call to you in prayer. Help them to make every effort to do your will on earth, giving you their doubts and fears as they trust you to order their steps. May they realize that weakness provides an opportunity for your strength to be revealed. We pray in your strong name. Amen.
Please join me in reciting the Pledge of Allegiance to the flag. I pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
The clerk will read a communication to the Senate.
Washington, D.C., October 29, 2013. To the Senate. Under the provisions of Rule 1, Paragraph 3 of the Standing Rules of the Senate, I hereby appoint the Honorable Edward J. Markey, a Senator from the Commonwealth of Massachusetts, to perform the duties of the Chair. Signed, Patrick J. Leahy, President Pro Tempore.
Mr. President.
The Majority Leader.
Following leader remarks, the Republican leader or his designee will move to proceed with SJ Res. 26, which is a joint resolution of disapproval regarding the debt ceiling. The time until 12:30 will be equally divided and controlled. The Senate will recess from 12:30 to 2:15 for our weekly business meetings of each caucus. At 2:15, senators should expect 2 roll call votes. First on the motion to proceed SJ Res. 26, and second, a cloture vote on the nomination of Richard Griffin to be General Counsel of National Labor Relations. This is a term for 4 years. Mr. President, I'm told S. 1592 is the desk and due for a second reading.
The clerk will read the title of the bill for the second time.
S. 1592, a bill to provide for a delay of the individual mandate under the Patient Protection and Affordable Care Act until the American Health Benefit Exchanges are functioning properly.
Mr. President, I would object to any further proceedings with respect to this legislation at the present time.
Objection having been heard, the bill will be placed upon the calendar.
Mr. President, today the Senate will consider a motion to proceed to a resolution of disapproval filed by the Republican leader, which would cause the country to default on its debts for the first time in history. Democrats will oppose this motion and vote to preserve the full faith and credit of our great country. I would remind my Republican friends that 2 weeks ago, every Democrat and 27 Republicans in the Senate, as well as 285 members of the House of Representatives, already voted to do the right thing and pay the nation's debts. So I look forward to quickly dispensing with this Republican resolution, which would risk America's economic security as well as a global depression. This vote will take place this afternoon after our weekly business meetings. Mr. President, I want to spend a little bit of time talking about nominations. Directly after the vote on the default legislation, we'll vote to break a filibuster of President Obama's nomination of Richard Griffin to serve as General Counsel of the National Labor Relations Board. Mr. President, there's already been 67 of President Obama's nominations filibustered. Mr. President, let's just vote on these nominations. And I can't imagine why it would be a good thing for this country or the Senate to not allow us to go forward on this nomination. If you don't like him, vote against him, but don't stop the debate from going forward. If cloture is invoked, there'll be 80 hours of debate under the new rules we've established here in the Senate. We will have 4 hours. The minority will have 4 hours. So I think that would be the appropriate thing to do. Mr. President, few Americans are aware of the job that the National Labor Relations Board does. But it looks out for the rights of millions of U.S. workers every day. Democratic workers, Republican workers, independents, Tea Party workers, regardless of whether they're in a union or not. Mr. Griffin has extensive experience in employment law. He's highly respected by his fellow labor lawyers on both the union and business sides. As General Counsel for the NLRB, he will safeguard fair compensation and working conditions for all American workers. This week, the Senate will also vote on a number of other crucial executive nominations, some of whom have been stalled for more than a year. The Senate will consider the nomination of Catherine Archuleta to serve as Director of the Office of Personnel Management. That is an extremely important position. She started her career in public service as an elementary school teacher. She will be the agency's first Hispanic director. Her desire to serve is earnest. This is what she said, and I quote, "You do it, this public service, because you have a deep passion for public good and civic engagement." That's her quote. She's worked in both the Transportation and Energy departments under President Clinton. She served as Chief of Staff to Labor Secretary Hilda Solis for 3 years. She's eminently qualified, yet Ms. Archuleta is the first OPM director to be filibustered in the entire history of this agency. This week, the Senate will also consider the stalled nomination of Alan Estevez to be a Principal Deputy Undersecretary of Defense. Mr. President, this man's nomination has been stalled for 402 days. He will be responsible for a $170 billion logistics budget. $170 billion. That's a year. This budget supports our men and women in uniform as well as millions of machines that make them and take them where they want to go. He specialized in military logistics for more than 10 years. And it's unfortunate that Republicans will hold up confirmation of such a crucial Defense Department nomination. Now, I'm told most of it's held up for an unrelated matter, dealing with some other issue. Just wrong. If you don't like this guy, stand up and say why you don't like him, vote against him. But don't stop us from moving forward on the nomination. Now, most of the opposition to this man that's been held up for 200 days is, I'm told, by the senior senator from Texas. The junior senator from Texas has placed a hold on another nomination, a man by the name of Tom Wheeler to be Democratic member of the Federal Communications Commission, FCC, very important agency. In addition to writing 2 books, Mr. Wheeler has founded several technologically important companies. He's co-founded the largest online targeted news service and helped develop the United States government's telecommunications policy. President Obama nominated Tom Wheeler, as well as Republican Michael O'Reilly, to fill 2 vacant seats on the FCC. So what's stopping us from filling these vacancies with a bipartisan pair of nominees? Listen to this. The senator from Texas has stalled the nomination because he opposes legislation proposed by Democrats in Congress that would require shadowy groups that spend millions on political advertising to disclose their donors. Now, this next one is really a doozy, Mr. President. The United States Secretary of Finance, Treasury, I'm sorry. Other countries it's called Secretary or Minister of Finance. Extremely important job. Now, this man is qualified. He's run the Office of Management and Budget. He's been the President's Chief of Staff. He's now Secretary of Treasury. And what a fine, fine man, Jack Lew. Jack Lew, even though he is the Secretary of Treasury of this great country, he can't go to meetings that other finance ministers from around the world can go. Why? Because the Republicans are holding up his nominations to all these important bank boards, finance boards, International Monetary Fund. He's supposed to be there. He can't go. He's a talented and dedicated public servant. He's already been approved by the Senate, confirmed by the Senate. Every Treasury Secretary serves as a United States representative on the international banks boards and offers input about America's position on global financial matters. That's his job. He can't do that because of what I've just said. It's an embarrassment that we haven't acted more swiftly to confirm him in this role. To think we have to file cloture on this? Yet the junior senator from Kentucky has subjected this nomination to partisan wrangling, and others have joined with him, I assume, as he threatens to do the nomination of Janet Yellen to serve as chairman of the Federal Reserve. Now, Mr. President, the presiding officer and others who serve in this body have served in the House of Representatives with a fine public servant by the name of Mel Watt. I got to know Mel Watt when he was chairman of the Black Congressional Caucus. He would come over and visit with me every month or so. Fine man. He's represented North Carolina's 12th Congressional District since 1993. And as a senior member of the House Financial Services Committee, he understands the mistakes that led to the housing crisis. He also has proposed legislation to crack down on the worst abuses in mortgage lending and help pass the Dodd-Frank bill to prevent predatory lending. By any measure, Congressman Watt is qualified to help struggling homeowners recover from the worst economic downturn in generations. And my Republican colleagues should give him the up or down vote he deserves, not filibuster him. I know some Republicans don't like Dodd-Frank. Obviously, they didn't mind the abuses that took place that led to the crashing of Wall Street. But he should be punished for that. So, Mr. President, at a time when America faces difficult economic times at home and varied threats abroad, it's crucial the Senate confirm these talented and dedicated individuals to serve in the executive branch of government. Let us vote on these nominations. They shouldn't have, in these normally easy, confirmable positions, a filibuster. Not long ago, I can remember Republicans who in this body were concerned because they couldn't get the votes they wanted on their nominees for President Bush. They've spread this record clear that it's a right of the president to choose the players on his team. We should return to that custom, remove partisanship from the confirmation process, and ensure highly qualified nominees receive the fair and speedy consideration they deserve.
The Republican leader.
I think at this point, senators from both parties can agree healthcare.gov is a rolling disaster. Every day seems to bring more near comic calamity. We hear about visitors being told things like their wife is really their daughter, or that they have multiple spouses, or that they're unable to apply due to current incarceration. Unsurprisingly, just 12% of Americans think the rollout has gone well. That's less than 14% of Americans who believe in Bigfoot. Those who succeeded in actually enrolling in a plan are vastly outnumbered by those who've actually lost their plans. And the real tragedy here is that many who've succeeded are finding out the product is actually worse than the website. I mean, the only thing the website seems to be good at right now is creating punchlines for late-night comedians. It's almost like Americans are being forced to live through a real live Saturday Night Live sketch. And if you're caught at last week's opener, well, it's getting harder to tell the Obamacare headlines from the Obamacare punchlines these days. Paper applications, 800 numbers, applying by fax. Obamacare appears to be leading us boldly into the 1980s. Remember, before this thing launched, the administration swore up and down that Obamacare was ready to go. Democratic leaders in Congress told Americans that the law's implementation was fabulous, that Obamacare was wonderful. The president reassured everyone that it was working the way it was supposed to. And of course, Washington Democrats bragged about their fancy new website, the website that cost taxpayers $100 million, $200 million, $300 million. Well, no one's quite sure. That's just one of the unanswered questions we hope they'll clarify soon. Now, to be fair, the president likes to say that Obamacare is about more than just a website. He's absolutely right. And that's why fixing a website won't solve the larger problem here. The larger problem is Obamacare itself. The larger problem is what the few people who actually have signed up for coverage have discovered about this law. The larger problem is how Obamacare is hurting people out there. It's about college graduates and middle-class families getting hit with massive premium increases they can't afford. It's about workers seeing their hours cut and their paychecks shrink because of this law. It's about millions of Americans who will lose their current health coverage because of Obamacare despite the president's promises. According to news reports, the Obama administration knew for at least 3 years that millions of Americans would not be able to keep their health coverage. The president's press secretary basically admitted yesterday that Americans would lose coverage too. Remember, this is the same president who said, and I'm quoting, "If you like your health care plan, you will be able to keep your health care plan, period. No one will take it away, no matter what." That's what the president said. This is just one of the many reasons Americans feel betrayed. One woman quoted in the Los Angeles Times put it this way. This is what she said: "All we've been hearing for the last 3 years is if you like your policy, you can keep it. Well, I'm infuriated because I was lied to." And here's how one North Carolinian put it to NBC News. "Everybody's worried about whether the website works or not, but that's fixable. That's just the tip of the iceberg. This stuff isn't fixable." That was after he lost a $228 a month plan and was faced with a choice of taking a comparable plan for $1,208 instead of $228 a month. The best option he could find on the exchange is one for $948 a month. "I'm sitting here looking at this thinking we ought to just pay the fine and just get insurance when we're sick," he said, after looking at all that. Americans up and down the country are beginning to experience the cost of Obamacare firsthand, and they're realizing that they are the ones stuck with the bill. It's not fair, it's not right, and Republicans are going to keep fighting to get our constituents relief from this partisan law. Of course, the most logical course would be to simply stop this train wreck and start over. But Washington Democrats still appear more interested in protecting the president's namesake, his legacy, than protecting their constituents from this law. I hope that'll change, because we can't move forward without Democrats. We've seen some signs that at least some Democrats are coming around, slowly, much more slowly than we would like, and I'm happy to engage in discussions to see where we might find common ground. Hopefully we'll eventually get to the increasingly obvious end game here, repeal, followed by true bipartisan health care reform. So look, it may be universally accepted that healthcare.gov is a disaster, but as the president reminds us, that disaster does not exist in a vacuum. The failure of the Obamacare website is emblematic of the larger failure of Obamacare itself. and of the kind of problems we can expect if Washington Democrats continue their stubborn defense of this partisan law. Now, Mr. President, on another matter, politicians regularly come to Washington promising fiscal responsibility, but too often they can't agree to cut spending when it counts. That's why the Budget Control Act is such a big deal. Since Congress passed the BCA with overwhelming bipartisan majorities in 2011, Washington has actually reduced the level of government spending for 2 years running. That's the first time this has happened since the Korean War. The BCA savings are such a big deal, in fact, that the President campaigned on it endlessly in 2012. He bragged about the bipartisan cuts in Colorado and in Iowa. He trumpeted the reductions from coast to coast, telling audiences from California to Baltimore that he, quote, signed $2 trillion of spending cuts into law. As our Democratic friends like to say these days, elections matter. And the President explicitly staked his reelection on the back of these bipartisan spending cuts. I mean, just look at the exit polls from November. A majority of Americans said that the government was doing too much. About two-thirds said raising taxes to cut the deficit was a non-starter. And compared to Obamacare, which more voters actually said they wanted to repeal, these levels of support are striking. So if our friends on the other side want to keep trying to claim an electoral mandate for retaining Obamacare, contradicted by the facts as that might be, well, using their own logic, we then have to call the mandate for reducing the size of government a super mandate. A super mandate. That's why their new plan to undo the cuts the President campaigned on and increase the debt is so outrageous. We hear that the senior senator from New York will soon announce a proposal to give the President permanent power to borrow more. In other words, he wants to extend the debt ceiling permanently by going around Congress. Let me repeat that. The so-called Schumer-Obama plan is a plan to permanently hand the President a credit card without spending limits and without lifting a finger to address the national debt. Truly outrageous, especially when you consider that our debt is now $17 trillion, which makes us look a lot like a European country. We have to get our debt under control before we move any further down the road to Greece or Spain. And time is not on our side. Now I hear the senator from New York is going to try and sell his proposal as a quote-unquote McConnell plan. I appreciate the attempt at a PR gimmick here, but there are two huge differences between the Schumer-Obama plan and what I've proposed in the past. First, Schumer-Obama would raise the debt ceiling permanently. I reject that idea entirely. And second, unlike Schumer-Obama, I believe that increases in the debt ceiling should be accompanied by reforms. That's just what we did in 2011, when Congress raised the debt ceiling in return for enacting $2 trillion in bipartisan spending control, the spending control the President campaigned on last year endlessly. That's the real McConnell plan, and if the senator from New York is interested in working with me to enact another $2 trillion in bipartisan cuts, then let's get down to brass tacks. The American people would love to see us working in a bipartisan way to actually help them. But if he insists on pushing the Schumer-Obama plan, he's not going to find any dance partners on this side of the aisle. Because handing the President a permanent blank check, increasing the size of government, and trying to overturn the most significant bipartisan accomplishment of the Obama years, well, that's just a non-starter. Our debt is a serious problem. I know Kentuckians think so. Like Americans all across the country, they understand it's completely unsustainable over the long run. And they understand it's standing in the way of jobs and economic growth today. So let's shelve the gimmicks and the blank checks and get to work on bipartisan plans to get spending under control. That's what our constituents expect. Finally, Mr. President, I move to proceed to S.J. Res. 26.
The clerk will report the motion to proceed.
The Senator from Kentucky, Mr. McConnell, moves to proceed to calendar number 223, S.J. Res. 26, relating to the disapproval of the President's exercise of authority to suspend the debt limit as submitted under Section 1002B of the Continuing Appropriations Act 2014 on October 17, 2013.
Under the previous order, the leadership time is reserved. Under the previous order, the time until 12:30 p.m. will be equally divided and controlled between the two leaders or their designees.
Mr. President,
The senator from Utah.
before I make my remarks, I understand that the senior senator from Tennessee has been waiting to make some remarks himself. I ask unanimous consent that he go first, and then if Senator Baucus is here, he goes second, I go third, but if Senator Baucus is not here, I'll go second then.
Okay. Without objection, the gentleman from Tennessee is recognized.
Mr. President, I thank the senator from Utah. If through the chair I might, if that suits his convenience, I appreciate that courtesy very much. And I shouldn't take more than about 8 or 10 minutes in my remarks. Mr. President, the President should ask the Secretary of Health and Human Services, Kathleen Sebelius, to resign her position because of the disastrous rollout of Obamacare. Taxpayers have spent $400 million to create exchanges that after 3.5 years still don't work. As a result, the White House had to announce last night that the key enforcement mechanism to their individual mandate, a $95 fine that increases every year, will be waived until the end of March of next year. That's fine for those currently without insurance. But for the millions being forced into the exchanges and losing their current insurance, there's no relief, just higher prices, a likely lapse in insurance coverage, a broken website, and broken promises. We already know of 1.5 million Americans who are losing their policies because starting January 1, many insurance policies that they now have will not be legal under Obamacare, and because the exchange will not be working, they won't be able to choose another policy. This chart gives an example of what's going on. Just in 3 states, California, Florida, and New Jersey, there are 1.4 million insurance policies that won't be valid after January 1 because they're not legal under Obamacare. Compare that number, 1.4 million, to the number of Americans in those 3 states who have reportedly applied on the website for insurance. So 7 or 8% of all the people who will lose their current policy have applied for a different policy. That's what's really going on across this country in families as people worry about health care. These are policies in the individual market. There are 19 million Americans in the individual market. We also heard on NBC News over the last couple of days that the Obama administration knew that 47 to 60% of the policies in the individual market wouldn't be legally offered under Obamacare, yet still said to people, if you like your insurance, you can keep it. Mr. President, at some point there has to be accountability. Expecting this secretary to be able to fix what she hasn't been able to fix during the last 3.5 years is unrealistic. It's throwing good money after bad. It's time for her to resign, someone else to take charge. No private sector chief executive would escape accountability after such a poor performance. And the principle of accountability is not and should not be foreign to the public sector. Admiral Hyman Rickover, father of the nuclear navy, told his submarine captains that they were not only accountable for their ships, they were also accountable for the nuclear reactors on their ships. If anything went wrong with the reactor, the admiral said, your career in the Navy is over. As a result of that dose of accountability, since the 1950s, there's never been a death as a result of a problem with a naval submarine reactor. Americans deserve that kind of accountability in the implementation of the new health care law. Instead, the Secretary appears not even to have told the President about known problems with the Obamacare website in the months and days leading up to the launch. Despite repeated requests, she's refused to tell Congress or the public the reasons the Obamacare website continues to fail, while insisting on more time and an undisclosed amount of money to fix it. Before the Internet, RCA knew how many records Elvis was selling every day. Ford knew how many cars they were selling every day. McDonald's could tell you how many hamburgers it had sold each day. Yet here we are in the advanced stage of the Internet age, and under Secretary Sebelius' leadership, the Obama administration will not tell us how many Americans have tried to sign up for Obamacare, or how many have actually signed up for Obamacare, or what level of insurance they've purchased, or in what zip code they live. Not only can they not tell us, they've done their best to keep us from finding out. With WikiLeaks and Edward Snowden spilling our beans every day, what's happening on the Obamacare exchanges is the best-kept secret left in Washington, D.C. The National Security Agency could learn something from Secretary Sebelius. Today, Mr. President, I will ask unanimous consent later today to approve a 6-page bill I introduced yesterday to require the administration to answer these questions every week. Secretary Sebelius is not responsible for enacting Obamacare, but she has been responsible for 3.5 years for implementing it. Now, many Americans have only a few weeks to purchase new insurance or be without health insurance. To expect the Secretary to correct in a few weeks what she's not been able to do in 3.5 years is unrealistic. Mr. President, it's time for the President to ask the Secretary of Health and Human Services to resign. I thank the President and I yield the floor.
Mr. President.
The Senator from Utah.
Mr. President, during debate over debt limit increase in 2006, then Senator Obama stated that, quote, "The fact that we are here today to debate raising America's debt limit is a sign of leadership failure," unquote. Leadership, then Senator Obama said, quote, "means the buck stops here. Instead, Washington is shifting the burden of bad choices today onto the backs of our children and grandchildren. America has a debt problem and a failure of leadership. Americans deserve better," unquote. That was former Senator Barack Obama. Mr. President, at that time, our gross debt was $8.3 trillion. It is now well above twice that, currently standing at $17.1 trillion, which is over 100% of the size of our economy. During that same 2006 debt limit debate, then Senator Biden said, quote, "My vote against the debt limit increase cannot change the fact that we have incurred this debt already and will no doubt incur more. It is a statement that I refuse to be associated with the policies that brought us to this point," unquote. Now, that was then Senator Biden. Mr. President, things have certainly changed since 2006. Now President Obama and Vice President Joe Biden preside over an administration that tells us that raising the debt limit is merely a matter of paying our bills and is a reflection of decisions made in Congress. Yet while it is ostensibly true that Congress has the power to raise the debt limit, it is not true that Congress makes spending decisions unilaterally, with no role being played by the executive branch. No amount of spending can be enacted without the President signing it into law. In addition, the President submits a budget every year. The White House also issues policy statements and veto threats on spending bills on a more or less frequent basis. And of course, every administration works with Congress to enact its domestic agenda, which inherently includes setting priorities in federal spending. So in short, the commonly repeated notion that questions surrounding spending and the debt limit are Congress's and Congress's alone to answer is simply an attempt by this administration to avoid accountability on these issues. Ultimately, regardless of what President Obama and those in his administration are saying now, both Congress and the executive branch are to blame for our current predicament. Let's take a look at that predicament for a moment, Mr. President. And the President has exercised his authority to suspend the debt limit under the Continuing Appropriations Act of 2014, which he signed into law on October 17th. On October 16th, public debt subject to the limit was around $16.7 trillion. On October 17th, the very next day, public debt subject to the limit was over $17 trillion. In one day, Treasury increased the debt subject to the limit by over $328 billion. Mr. President, let me repeat that. The debt increased by over $328 billion in a single day. That brings the increase in total public debt under this administration to more than $6.4 trillion, an amount that is, by all accounts, unprecedented. Echoing earlier sentiments of then-Senator Biden, I refuse to be associated with the policies that brought us to this point. The debt limit debate provides us with an opportunity to re-examine our nation's fiscal course and take steps to correct it. Sadly, we have a president who appears unwilling to have that conversation. Instead, he apparently wants to press forward, full steam ahead on our already unsustainable course, settling future generations with unheard-of debts and broken entitlement payments in the process, or should I say promises in the process. Unfortunately, as the Congressional Budget Office has made clear, over the course of President Obama's administration, the federal government has recorded the largest budget deficits relative to the size of the economy since 1946, causing our debt to soar, as we all know. Federal debt, as a percent of the economy's annual output, is higher than at any point in U.S. history, except for a brief period around World War II. CBO makes three other things equally clear. One, our debt path is unsustainable, threatening our economy and putting us at risk of a fiscal crisis. Two, the root of our fiscal problem is federal spending, not a lack of revenue. And three, the main source of our spending problem is our unsustainable entitlement programs. That being the case, Mr. President, any serious talk about raising the debt limit must include a real, concrete discussion about entitlement reform. As every credible analyst will tell you, we need to face the fiscal facts and enact serious structural reforms to our entitlement programs. So far, President Obama has been unwilling to even engage in this discussion. These days, every fiscal discussion with the White House begins and ends with demands for additional tax hikes to fuel even more spending. And I guarantee you it'll be spending. It won't be paying down the national debt or paying down what we owe. It'll be to spend more. Of course, the President will occasionally resurrect offers he's made in the past, in past failed fiscal negotiations, to entertain small entitlement changes, including, for example, movement to a different price index for certain cost of living adjustments. But at the same time, the President and his administration have made clear that even those small entitlement changes will only be on the table if tax hikes are delivered first. That is the President's precondition for even entertaining tax reform or entitlement reform, even on the heels of more than $630 billion tax hike at the beginning of this year and another $1 trillion in revenue delivered courtesy of Obamacare. Mr. President, entitlement reform is not an option, it's a necessity. Structural reforms to our health care entitlements should not hinge on another tax and spend operation. And structural reforms to Social Security should not be held hostage to another tax hike. Earlier this year, I personally presented to the President in detail and in writing, again I'll emphasize personally gave him this, 5 reform proposals relating to Medicare and Medicaid that have received bipartisan support, Democrat and Republican support, in the past. I asked him to consider the proposals and have since asked members of his administration to likewise give the proposals consideration. And by the way, when we had our supper down at the White House in the family dining room, I brought it up again. By the way, I brought it up with the Secretary of Treasury over and over. I did not wait until an impending debt limit debate. Rather, I put my proposals forward in good faith, in a good faith effort to begin timely discussions. Unfortunately, thus far, I've not received even the slightest response, and the clock on Medicare and Medicaid keeps ticking. And both of them are running more and more deficits as we speak. The situation was so, and by the way, the 5 points were bipartisan. They were bipartisan matters that both Democrats and Republicans supported. The situation with Social Security isn't much better. The trustees of the trust funds embedded in the Social Security system, including top administration officials such as the Treasury Secretary, have in no uncertain terms urged Congress to act quickly on reforming the retirement and the disability insurance programs to move them towards sustainability. Quite simply, it would be folly to approve of yet another debt limit increase without also working to address these programs, which are the main drivers of our debt and of our deficits. Therefore, I disapprove of the President's exercise of an authority to suspend the debt limit, and I urge all of my colleagues to similarly disapprove. Mr. President, the recent debt limit impasse and the impasse of 2011 also provided a good deal of information about lack of accountability of the Treasury Department and of our regulatory agencies. I currently serve as the ranking member on the Senate Finance Committee, which has oversight responsibility toward the Treasury Department. To fulfill those responsibilities, I've been asking questions of Treasury about debt and cash management procedures, and I have repeatedly been stonewalled by the Treasury Department. I don't know that I've ever seen this happen before in either Republican or Democrat administrations. For example, when we have approached the debt limit, I've asked questions about how much cash our nation has in the till, only to find the Treasury won't tell me, and that they prefer that Congress rely on estimates from think tanks and Wall Street firms. Furthermore, during the most recent debt limit impasses, administration officials were busy frightening seniors, our troops, and financial market participants about whether or not they would be paid in the event that the Treasury were to run out of cash. Officials also identified threats of massive financial instability stemming from a breach of the debt limit and of potential disruptions from a downgrade of the rating on U.S. government securities. So naturally, I asked Treasury, and in fact every voting member of the Financial Stability Oversight Council, or FSOC, to provide Congress and the American people information regarding the plans they had in place to respond to such catastrophes. Mr. President, out of close to 20 letters that I sent to FSOC members, I received only 2 responses. Apparently the FSOC, which was empowered by the so-called Dodd-Frank Act to monitor and respond to emerging threats to financial stability, does not identify or share response plans with respect to any threat that could emerge as a result of government policies. That being the case, I believe that we should strip FSOC of any notional oversight of financial stability and call it what it really is, another unrestrained executive agency, created only to enact additional regulations. After the fact, we have found out that Treasury and some financial regulators had plans for how to respond to a debt limit breach or a ratings downgrade. Yet none of these plans were shared with Congress. Mr. President, put simply, if we're going to empower a federal regulatory body like the FSOC to develop contingency plans to respond to threats to financial stability, then that body should be required to share those plans with the American people. Sadly, thus far, that hasn't been the case. Another thing I've learned from our recent debt limit impasses is that we need to take a closer look at Treasury Department's use of so-called extraordinary measures, which have become all too ordinary. These, quote, extraordinary measures, unquote, are merely ways for the Treasury Department to temporarily delay facing a debt limit increase by issuing shadow debt. For example, Treasury can simply declare a debt issuance suspension period and stop issuing debt that it normally would issue while instead effectively telling the lender, don't worry, I'll pay you back later with interest. I believe that authority to use these types of extraordinary measures needs to be reexamined. As you can see, Mr. President, there are a number of problems that need to be confronted with regard to our nation's ever-growing debt. Like I said, we need to work together to address our nation's unsustainable entitlement programs. Otherwise, any effort to rein in our debts and deficits will amount to little more than tinkering around the edges. In addition, we need to improve information sharing between Congress and the executive branch on issues regarding or relating to our debt. The Treasury Department and our financial regulators have a lot to do with maintaining the depth, liquidity, and efficiency of the market for Treasury securities. And Congress has a duty to exercise oversight over these functions. Unfortunately, the administration far more often than not opts to keep Congress in the dark on these issues. This has to stop. Mr. President, by using his authority to suspend the debt limit through February 7, 2014, President Obama has opted not to confront any of these serious issues. Instead, he's leading us even further down a path that we already know is unsustainable. That being the case, I plan to vote in favor of the resolution of disapproval of this debt limit suspension, and I urge my colleagues to do the same. Now, having said all this, we're in a really big mess on Obamacare, or if you want to call it, quote, the Affordable Care Act, unquote. Nobody believes it's affordable at all. They know it's going to lead us right into even more bankruptcy than we have right now. I suspect that over time, our brilliant people in the IT world, information technology world, many of whom I know personally, will find some way to resolve what really has been a horrible, horrible situation. We all know it's horrible. And I hope they can. I hope they can resolve that. I think it's going to be hard because it's such a mess. It's such a muddled mess, and it's been done by at least 4 major groups and dozens of others. I hope Mr. Zients is successful in his efforts to try and cure that. But that doesn't cure the faults or problems with Obamacare. What about the 30-hour rule? A lot of people, a lot of businesses, especially small businesses in our society today, are making sure their employees don't work more than 30 hours. Because if they do, it triggers their having to pay what appear to many to be outrageous health care costs. That's just one thing. And that's not going to be easily solved because the bill is such a stupid bill. It was stupid to begin with. We knew it wouldn't work to begin with. We made that case that it wouldn't work. And frankly, we're here in this really, really ridiculous posture where we've been stymied because of, I don't want to call it illiteracy in the IT world, but certainly there's some incompetency here. I hope they can resolve that. But that still doesn't resolve the 30-hour rule, which is a very important thing. Or how about the 50-employee rule? A lot of businesses that would have expanded, small businesses that would have grown, that would have tested the market and really gotten involved. They don't want to employ more than 49 people and trigger a massive, massive sudden cost to their businesses. These are problems that basically are unsolvable under the bill. And they may be even larger problems than what we have with regard to the problems that I've been mentioning. And that's just the beginning. I could speak hours about what's wrong with this lousy bill. I just wish some of my colleagues on the other side would start saying what they actually know. They know that it's a lousy bill. They know that it's something that isn't not going to work. And if it does, if we continue to maintain that it has to work, it's going to be a massive cost to society with less effective health care than we've ever had before. It isn't just these technical problems that we have to solve. It's the economic problems that just don't make sense. And I know what's going to happen. Within the next year or two, our friends on the other side, or should I say the White House in particular, he's going to throw his hand, President Obama's going to throw his hands in the air and say, it's not working, we've got to go to a single-payer system, meaning socialized medicine. And anybody who believes that's the way to go, it sounds easy, but anybody who believes that's the way to go hasn't looked at socialized medicine around the world, which they can point to some instances where it's worked for a short time. But over time, it results in less health care, higher costs, and stultification of what really could be a great health care system. I want to solve these problems in health care, but I think they ought to be solved on a bipartisan basis and not just a partisan basis, which is where we are with regard to Obamacare, or should I say, quote, the Affordable Care Act, unquote. There are a number of people in this body and in the other body who, like me, have worked in health care areas on health care issues ever since we've been in the Congress, who'd be willing to sit down and get this resolved. But I have to say, there was no real consultation. There was no real effort to work in a bipartisan way, as far as I could see, even at the lower levels in Congress. It was just, they're going to pass this, and that's the way it is. And now they're stuck with it. And should I say, they're not really the ones who are stuck with it. It's the American people and the American taxpayers who are stuck with it. We've got to, sooner or later, get together and resolve this problem without going to socialized medicine. I've talked to a number of doctors, healthcare providers, who are going to get out of the profession. They don't want to be governed by this type of governance. And frankly, you're going to find if we go to socialized medicine, doctors aren't going to work more than 6 or 8 hours a day. Where today, they'll work as long as it takes to serve people who need their help. And you're going to find a real dearth of doctors. We're going to find a real dearth of ability to provide the health care that people need, and we're going to start doing what really that IPAD board is set up for, and that is rationing. And once that starts, the American people are going to rebel. And it's going to happen sooner or later if we don't get our friends on the other side to at least work with us on finding some resolution. Now, I have to say, we're working on our side to come up with a resolution. And I hope I can interest our colleagues on the other side. I admit that we can do a lot better than we're doing around here, and we can do it in a much better bipartisan way than we're doing it. I think some people get a joy out of just creating battles around here when we should get a joy out of resolving problems. Mr. President, I suggest the absence of Mr. President, I yield to the distinguished senator from South Dakota.
Thank you, Mr. President. I thank my colleague from Utah and appreciate his very eloquent remarks. He's been a great leader on health care issues for a lot of years around here and was a fierce opponent of Obamacare when it passed and laid out very compelling arguments at the time about why we shouldn't adopt this law. And unfortunately for the people of this country, many of the predictions that he made are coming out to be true. But I appreciate the leadership that he provides for us as a member of the Finance Committee and his continued advocacy for policies that are good for consumers in this country when it comes to the issue of health care. Mr. President, this Friday marks a full month since healthcare.gov went live. Now, this is the website that, in conjunction with the new health care law, was promised as a solution to all the problems in the delivery and cost of health care in this country. And to be frank, Mr. President, I don't think anybody would deny this fact on either side of the political aisle. These past 29 days have been nothing short of a disaster. The administration won't disclose how many Americans were actually able to enroll in plans. They aren't forthcoming when it comes to disclosing exactly what the problem is with the website, other than calling the problems, quote, glitches. Well, Mr. President, glitches refer to temporary problems that are easily remedied. Mr. President, the problems with the health care law cannot merely be called glitches. The problems go deeper than technical problems on a website that, which, by the way, cost $400 million to develop. As the President said last week, Obamacare is not just a website, it's much more. Well, Mr. President, that's true. It is much more. It is a fundamentally flawed piece of legislation that is resulting in real-life consequences for middle-class Americans. My colleagues and I, and the Senator from Utah and others, have been speaking about the broken promises of this legislation since it came to the floor of the Senate almost 4 years ago. We know that this law will not work as promised, and unfortunately thousands of Americans are realizing it too as they face higher costs and canceled insurance plans. Many Americans are experiencing sticker shock when it comes to their health care costs. Middle-class Americans already struggling to make ends meet are now facing steep premium increases in the Obamacare exchanges. Last month, Avik Roy of Forbes reported on a recent study that said, and I quote, Obamacare will increase insurance rates for younger men by an average of 97 to 99%, and for younger women by an average of 55 to 62%, end quote. Now, in my home state of South Dakota, that's more than just a statistic. That is a grim reality facing thousands of young men and women. By comparing a typical low-cost plan for a healthy 30-year-old person in my state of South Dakota this year with a bronze plan that they would be able to get in South Dakota's health care exchange next year, the premium increases are nothing short of staggering. Younger women are going to face a 223% premium increase, and younger men are going to face a 393% premium increase when you compare data from the HHS with data from GAO about premiums in South Dakota in January of this year. That's more, Mr. President, than a $1,500 annual increase for women and a $2,000 increase in health care premiums each year for 30-year-old men in my state of South Dakota. But it's not just South Dakota. It's not confined to South Dakota alone, and people in my state are not alone in their experience of sticker shock. You look at what's happening in the state of Nebraska, where premium increases are 143%, or in Georgia, where premium increases are 198%. Money that could be used to pay off student loans, save for a home, or start a family is now going to be used to pay for Obamacare. And according to a new analysis by Avalere Health, Americans could face steep cost-sharing requirements like co-payments, co-insurance, and deductibles layered on top of their monthly premiums. It's clear that health care costs are going up. They're not going down, particularly for younger Americans. Additionally, President Obama promised that health care premiums will go down by an average of $2,500 per family. Well, if you look at what family premiums have done, they've actually jumped by more than $2,500 since Obamacare became law. While costs continue to increase, despite the President's promises to the contrary, household income has fallen by over $3,700 since President Obama first took office. Mr. President, no IT specialist can fix the problem of increased health care costs due to Obamacare. The only fix is to repeal this law and to start over. Now, in addition to higher costs, families are discovering other grim news. For example, they can't keep the plan that they like, despite the fact that the President promised that they would be able to. Over and over and over again, the President told Americans that they would be able to keep the insurance that they have. Well, millions are now facing health insurance cancellation notices due to Obamacare, and that number is expected to increase up to nearly 10 million by the end of this year. In fact, just this morning, CBS News published a story with the headline, and the headline read, "More than 2 million people getting booted from existing health insurance plans." These are Americans who had coverage they liked and now cannot continue to purchase. Finally, after dozens of media reports of Americans who are losing plans they like, the White House spokesman said it is true that some Americans will not be able to keep the health care plan that they like under Obamacare. Well, don't have to tell people in this country, as Deborah from Westchester, California said in an article last week in the Los Angeles Times, and I quote, "All we've been hearing the last 3 years is if you like your policy, you can keep it. I'm infuriated because I was lied to," end quote. Care First, Blue Cross Blue Shield is being forced to cancel plans that cover 76,000 individuals in Virginia, Maryland, and Washington, D.C. due to changes made by President Obama's health care law. That represents more than 40% of the 177,000 individuals covered by Care First in those states. President Obama said in July 21st of 2009, if you like your current plan, you will be able to keep it. Let me repeat that. He said, if you like your plan, you will be able to keep it, end quote. That's from 2009. But he also went on to say, I won't sign a bill that somehow would make it tougher for people to keep their health insurance, end quote. And that's from another conference he had with bloggers back in 2009. Mr. President, it is abundantly clear that this is not a simple misstatement or a glitch in the law. It is another broken promise that reveals serious underlying problems with the core principles of this law. No IT specialist can fix the problem of canceled plans due to Obamacare. The only fix is to repeal this law and to start over. The President promised that people could keep a health care plan that they liked. But an NBC News article published yesterday shows that the administration knew as early as 2010 that this wasn't going to be the case. NBC is reporting that 50 to 70% of the 14 million consumers who buy their insurance individually in the individual marketplace can expect to receive a cancellation letter or the equivalent over the next year because their existing policies don't meet the standards mandated by the new health care law. One expert predicts that number could reach as high as 80%. And all say that many of those forced to buy pricier new policies will experience, quote, sticker shock. You don't have to look any further than George Schwab, 62-year-old man of North Carolina who said he was perfectly happy with the plan from Blue Cross Blue Shield, with the plan that he currently had, which also insured his wife for a $228 monthly premium. But this past September, he was surprised to receive a letter saying his policy was no longer available. The comparable plan the insurance company offered him carried a $1,208 monthly premium and a $5,500 deductible. And the best option he's found on the exchange so far offered a 415% jump in premiums to $948 a month. The deductible is less, he said, but the plan doesn't meet my needs. It's unaffordable. I'm sitting here looking at this, thinking we ought to just pay the fine and just get insurance when we're sick. That's what Schwab said. Everybody's worried about whether the website works or not, but that's fixable. That's fixable. That's just the tip of the iceberg. This stuff isn't fixable, end quote. And that's from Mr. Schwab of North Carolina. And that's just one of many stories, Mr. President, out there about how this law is affecting average Americans. So much so that now even Democrats have come out criticizing parts of the health care law. Most recently, there were 10 Senate Democrats who asked the administration to delay the deadline to sign up for Obamacare before the individual mandate tax kicks in. While I agree that Americans shouldn't be expected to pay a fine for not having a product that they can't even access, delaying implementation does not solve the underlying problem that this bill is simply bad policy. It was a partisan bill that was rushed through without adequate forethought into the implementation problems and the serious adverse effects it would have on Americans' daily lives. Giving people more time to try and navigate a broken website with glitches is not going to fix this underlying fundamental flaw in this law. Mr. President, a majority of Americans, 56%, believe that the website glitches are part of a broader problem with the health care law. Obamacare is more than a website. It's real-life consequences that squarely hit middle-class Americans. Americans are facing sticker shock and discovering that they're being dropped from an insurance plan that they like. As one woman said, "I was all for Obamacare until I found out I was paying for it." And that, too, was a story in the LA Times that ran over the weekend. Mr. President, Obamacare is not ready for prime time. The President's got a new healthcare.gov czar, Jeffrey Zients, who's been tasked with coming in and trying to fix the website by the end of November. But a fix to the website by the end of November doesn't rectify the underlying problems with this law. The problems with this law are more than just problems with a website. We need to continue to work to repeal the onerous parts of this law and to replace it with solutions that actually lower the cost of health care and give Americans continued access to a doctor they choose at a cost that they can afford. Mr. President, Republicans here at the time when this law was being debated and passed in the Senate several years ago and subsequent to that time have consistently put forward solutions to the health care challenges that we face in this country that don't entail having the government take over literally 1/6 of the American economy. And as we can see from the rollout of this, the government doesn't do complicated things very well. This is a disaster at the rollout, but it is a train wreck in terms of substance and what it's going to do and the harm that it will cause to middle-class Americans. There are so many better solutions, Mr. President. We should allow people to buy insurance across state lines, create interstate competition, allow market forces to drive insurance costs down, allow people and businesses to join groups so they can get the benefit of group purchasing power. Do away with the issue of defensive medicine by getting rid of a lot of the junk lawsuits that are clogging up our legal system in this country. Allowing people to have a tax credit where they can buy their own insurance and use their judgment and allow for transparency when it comes to pricing and outcomes so that the market in the competition that exists out there works in a way that makes insurance rates come down for everybody and improves the quality of health care in this country. There are so many good ideas out there, Mr. President, that don't involve a government takeover of health care. And the results now that we've seen that has caused. And so I hope that not only will the American people, who are, I think, quickly coming to the conclusion that this is a bad law, it is a flawed policy to start with, but members of Congress here in Washington, D.C., members of the United States Senate will also come to that conclusion. And will decide that it is time to not only delay this, but to repeal it and start over. We need a do-over. The American people need a do-over. We need an opportunity, Mr. President, to put policies in place that actually will put downward pressure on insurance rates in this country rather than increasing them, which is what we've seen with Obamacare, dramatic increases for many people across this country. Loss of coverage that people liked. They were told by the President repeatedly, over and over and over and over again. The President went out there and said, if you like the insurance you have, you can keep it. Well, we now know, Mr. President, that's not true. And we know that the administration knew that wasn't true. And so it is time that we acknowledge we need a do-over. The American people need a do-over. We need health care policies in this country that drive down costs for people, for families, middle-class Americans, that improve the quality of health care delivery in this country, and that don't create costly harm to the economy. We hear over and over and over again that the mandates and the requirements and the costs associated with Obamacare are making it more difficult and more expensive to create jobs in this country, and we're seeing an economic growth rate that is sluggish in the 1% to 2% range. We're seeing the lowest labor participation rate literally in the last 35 years since Jimmy Carter was president of the United States, chronically high unemployment, lower take-home pay, an economy, Mr. President, that is suffering from too much cost and too many policies that actually make it more difficult, more expensive to create jobs. We need to be looking at health care policies that improve coverage, lower costs, and make it less difficult and less costly to create jobs in this economy so we can get Americans back to work. We get our economy growing and expanding at a more robust rate and improve the standard of living and the quality of life for people all across this country. This policy, the Obamacare health care policy, was ill-fated, was misguided from the beginning. And now we're seeing the effects and the results of that. And hopefully here politicians in Washington, D.C. on both sides of the aisle will come to the correct conclusion, and that is that it's time to start over and do this the right way. Mr. President, I yield the floor.
President, I suggest the absence of quorum.
The clerk